Welcome to Bloomberg ETF IQ Europe. I'm Francine Lacqua. Over the next 30 minutes, will be your guide to the region's thriving market in exchange-traded funds. Everything you need to know about the funds and the flows. A record rotation optimism for a post-pandemic recovery sees investors pile into underloved sectors while defensive bets crash. We'll monitor the moves. Is it time to buy then? As the dust settles on America's election, we'll discuss how investors should position for a Biden White House. And after gold tumbles on vaccine optimism, European ETFs tracking the metal continue to see inflows. We'll discuss the prospects for one of 2020's most popular assets. Well, hi, everyone. We're going to have a packed show. But first up, let's take a look at which countries and sectors have been attracting the money. Danny Berger's here with the details. Hi, Danny.
Hi, Francine. That's right. I've got FFLO up on my terminal here. And you can see that for European tracking ETFs over the past week, we've seen net outflows, 400 million to be exact. This is interesting after a week where we saw the stock 600 rise 7%. The worst region was the Nordic region. But I really should say when you see $141 million worth of outflows, this is really concentrated on one singular fund. It's a high dividend, low volatility fund. Low volatility has not been doing very well as a strategy over the past week as investors go more towards those cyclical and volatile names. You also see, though, this buildup of outflows in Germany and France and Italy and Spain. Sure, that could be coronavirus fears. It could be taking some profit after the rally we saw. But regardless, flipping to outflows after we actually saw some solid inflows last week. Finally, I should just point out United Kingdom seeing some very, very slight inflows today. That's all thanks to some stock funds. For the most part, gilt funds have been seeing outflows over the past week, but really stocks helping that bring it back, though it doesn't help fix the picture we're seeing where investors in European ETFs have, for the most part, withdrawn their money over the past week, Francine.
Danny, thank you so much. Our Danny Berger there. Now, it has been quite a week for investors. The biggest exchange-traded fund in the world added just shy of $10 billion on Monday as markets jumped on news of coronavirus vaccine progress. State Street's S&P tracker saw one of the three best days in more than a decade. Now, as well as a surge of new money, there was also a breathtaking rotation, investors dumping tech and buying into some of the most beaten-up sectors of the market. Well, joining us now to discuss the moves and how they're showing up in the ETF space is Sam Potter. He's our senior editor at Bloomberg who oversees ETF coverage. Sam, thank you for joining us. If you look at the SPY flow, quite something, but this wasn't just indiscriminate buying, was it? Let's get to Sam.
Good morning. No, it wasn't. As you just mentioned, it was one of the three biggest inflows in a decade. It was more than 10 times the nearest competitor on the day in terms of inflow. Now, when we see that kind of volume, that kind of inflow into a broad stock index like the S&P 500, you could say immediately indiscriminate buying. People are just going risk on and they want in stocks. But as you heard Danny talk about just now and the flow picture, and as you yourself have mentioned, that's not the case. All year long, a bet on the S&P 500 has really been about tech stocks, which have dominated the gauge and driven the gains. And this time, what we have seen is a move away from that. And if you look under the surface of that eye-catching 10 billion and look at some of the other funds getting inflows, we saw XLF, that's the financials ETF. We saw XLI, which is the industrials ETF. Both had the best inflow since June on Monday. Jets, the airline ETF, that surged so fast that there was a disconnect in the pricing. It ended with a premium of 1.8%, which was the highest since March. So what we are seeing is bets on a more broad-based rally, this rotation to cyclicals, the vaccine news causing hope that actually some of these beaten-up sectors are going to revive.
Sam, plenty of cash chasing equities. Does this mean we're finally seeing some of the huge flows into fixed income ETFs reversing?
Well, this is the fascinating picture. Obviously, all year long, we have seen a pretty strong bid for bond ETFs. The inflows hit a record for the first time ever inflows into bond ETFs in the US may actually beat inflows into equity ETFs. And you would expect with a big risk-on move like we're talking about that maybe some cash would be coming out of those bond funds. In the event, what we see, there's been a small exit from government funds, but it's minor in the scheme of things, and the bonds are still recording inflows overall this month. What's that telling us? It's telling us about the election result and the consequence of that. Monetary stimulus, because we may be looking at a divided Congress, the chances of a large fiscal stimulus have dropped. That puts all the onus on monetary stimulus, on the Fed. That means low yields and asset purchases. That makes bonds still a secure bet. At the same time, we still have risks around us. We still have COVID. We still have the election to be finally settled in terms of whether there's this blue wave or not. So investors are not yet ready to completely abandon the sort of safety of bonds.
Thank you so much, Sam Potter there. Bloomberg News. Now joining us today is Keshava Shastri, Head of Capital Markets at DWS. Keshava is also Chair of the ETF Committee at the Investment Association. Keshava, thank you for joining us. When you look at the big market moves, actually, that we had on the back of the U.S. politics, on the back of this rotation, how does it play out in the ETF world?
Yeah, thank you, Francine, for inviting. Great to be here. We've had an amazing year, actually. We've seen we're on track to have a record year this year. We're up nearly 12 billion in net new assets. And the price action, it's interesting that you mentioned and also what Sam mentioned. Some of the news on the vaccine has been coming out, and the market reaction shows that some of this already been priced in. But the vaccine still has a few more steps to go through before mass public distribution, and might not see mass production before end of the Northern Hemisphere winter. But on this basis, we probably assume there'll be cyclical industries that could benefit a lot from this, who are the initial kind of the losers in the early pandemic, the leisure, the hospitality, the airline. But when we speak to clients now, they're really looking at coming back into those kind of sectors, some of our world sector funds and the US sector funds as well. And there is, what Sam interestingly mentioned, there is a equity flow coming in that we've seen, especially like some of our China products. There's what you mentioned with the election results. There's probably better trade relationship. So our China fund, with more than $1 billion now, significant inflows, and also really strong proactive discussion with clients to look at how they get into that, both on the equities but also bonds as well. So it looks like more of a risk on, and also on our credit ETFs as well, we're seeing inflows in our fixed income. So to what Sam mentioned, we're not seeing outflow from fixed income to equities. It's actually equity having inflows, but also fixed income also having inflows. And the interesting is also the ESG. Right. When the market moved down in March, April, people went out of the core benchmarks, but they're coming back in through ESG, which has been a big benefactor as well.
Keshava, can I just get back to some of the market rotation that we saw? Do those moves, are they actually led by ETFs, or do ETF moves then follow?
I don't think, we've done a lot of empirical evidence on this. I don't think, obviously ETFs price comes from the underlying basket, but, ETFs are not big enough to have a huge impact on the underlying. I think the market makers that you see will look at both those angles. I don't think it's quite right to say that ETFs having a massive impact on the underlying basket itself. But obviously a significant demand in ETF coming through, the market makers will hedge it using the underlying basket to make sure that they provide best execution for clients. So it's not like one is, the ETF is having a negative impact at all. It's actually, in many cases, it's providing that 2 layers of liquidity that the market has been talking about and the issuers are talking about.
Keshava, thank you. Keshava Shastri there from DWS stays with us. Now, coming up, what does a record rotation mean for quant strategies, and how should investors be positioned for a Biden presidency? We'll discuss that next. This is Bloomberg. This is Bloomberg ETF IQ Europe, everything you need to know about the funds and the flows. I'm Francine Lacqua. Now, how should investors position for a Biden White House? And what does the rotation mean for quant strategies? Let's get more with our Danny Berger. Danny, what strategies have been doing well through all of this?
Francine, there's this really interesting push and pull between the momentum and the value story. There had been some repricing out of value after the Biden win, though his hopes for a blue wave faded, which was said to have really benefited value. But as the week unfolded, here's what the flows ended up looking like. And that's some pretty sizable outflows coming from low volatility. So this is more or less a bond proxy bet. It's going to be doing better in a lower yield environment. However, with the vaccine news, you see the cyclicals outperform, more volatile stocks outperform. So we get these outflows coming from low volatility. Now, when it comes to inflows, size hits the top over the past week in terms of smart beta flows, seeing $156 million worth of inflows. So this is smaller cap, riskier stocks. Again, these are the kind of equities we saw investors really rally to after the positive vaccine news, with hopes that we'd get a resurgence. And although momentum got hard hit both globally and in Europe, momentum ETFs still saw inflows, more than $100 million worth of inflows. I should say that contrasts with value, which only saw half of that amount. So at least ETF investors over the past week still going with the old reliable momentum trade, perhaps not necessarily convinced that value is the place to be, though I should say a lot of strategists say European cyclicals, European value will do better under a Biden presidency, given perhaps more softer trade relations, less tension, which should benefit a lot of European industries. Francine.
Danny, thank you so much. Our Danny Berger there. Still with us, Keshava Shastri from DWS. Keshava, when you look at what happened in terms of money flowing maybe into gold and other parts of asset classes in the ETF space, actually, does the market become more sophisticated in dealing with political turmoil? It could be the U.S. election, or it could be something happening in Hong Kong.
Absolutely. We see, clients really, especially in Europe, 80% plus of our clients are institutional clients, and they're engaged very actively with us on the capital markets team, but also on the sales team, to really look at how do they position this. But we saw this during the Brexit day, the elections in 2016, and even this year, we came into the office much earlier than normal market hours to really help clients get that exposure, whether long or short. And that's the other thing that's happening in the US. Hedge funds have been a lot more active. For the last decade plus time, but in Europe they're slightly a bit behind. But in the last 2-3 years, they've really been using the advantage of ETFs, intraday trading, going long, but also going short, to put on those strategies. And what kind of Danny mentioned about the short-term quant guys. On Monday, they pretty badly got hurt on playing the long momentum, which has been very much the long tech recently, long tech, but also short value. But short value also was played as a long momentum game because the value was kind of going down in one direction. So and that reversal on Monday had a significant impact. And we saw clients using some of our ETFs to really play that and make sure they were able to either hedge or also put into the new position. But to what Danny mentioning, that there are still people looking at this is still a short move, but they can really come back in again and use that strategy of kind of being long momentum. But it is whether if it's gold, again, gold has been a very big trend you mentioned at the beginning. We have a $10 billion kind of commodity platform, and the gold is like $8 billion between different currency hedging products that we have. And that's been really used, and also between currency hedging, looking at if it's euro or sterling, people's expectations. So people are rotating between currency hedge products of either if it's commodities or if it's kind of even equity and fixed income, to really play that political landscape and how that has having an impact in the marketplace. But that sophistication of using not only for long-term, long exposure, but using more tactical trades is significantly increasing in Europe, and more hedge funds and smart money using the products as well.
But Keshava, so the more the money is using ETFs in Europe, how will it actually change the markets? Again, one of the themes that we try and explore is that it's still very nascent in Europe compared, for example, to the ETF market in the US. Does it really catch up, or at least try to catch up, in these kind of very volatile and very difficult times for the markets?
Absolutely. Actually, you mentioned at the beginning, as the chair of the IA, after the March volatility, we put out a paper from the industry to really look at how that market behaved and how clients use the products. And because it's an institutional client base, they use it very sophisticatedly. And what we saw was that, like in the US, in Europe also, the use of ETFs increases significantly as volatility really increases materially. And obviously, in US, you have some of the structural evidence supportive of like tape, and there is a single consolidated tape and completely visible volume, which also is there now after MiFID II. You have the post-trade transparency, but the data is not as easily visible because there's no consolidated tape, and we as the industry body are working on that. But when you look at the empirical evidence, and again, happy to go more into detail to anybody else has questions afterwards, but the empirical evidence does show, even in Europe, the increased use of ETFs is increasing throughout when the volatility comes in. It is not just a product that's used during calm period, but if you look at all of our peers in the industry, the client both the conversation but also use is getting broader and deeper in terms of the size of products. We see even during the height of the crisis in March, April, we had 400, 500 million buy orders coming into our dollar credit and some of those funds, which in other wrapper products we're actually seeing outflows or significant trouble. So it is increasing in Europe. With a fragmented market, Francine, as you mentioned, it's harder to get to the detail or get the full picture quickly. But there are experts teams like capital markets teams in issuers that we can get to that product information.
Keshava, thank you. Keshava Shastri there from DWS stays with us. Coming up, news of a vaccine breakthrough saw the gold price slump the most in 3 months earlier this week. So why have European funds continued to see inflows? We'll discuss that next and take a look at this week's ETF winners and losers. This is Bloomberg. This is Bloomberg ETF IQ Europe, everything you need to know about the funds and the flows. I'm Francine Lacqua. Now let's take a look at this week's winners and losers with our Danny Berger. She has your ETF leaderboard. Hi, Danny.
Hi, Francine. Over the past week, what we've seen in funds and flows in European-listed ETFs really reflects some of the greater euphoria we saw in markets to kick off the week, reflecting the news that there's progress on a coronavirus vaccine. Much like in the U.S., we saw the biggest S&P 500 fund see a record day of inflows. The best fund in Europe over the past 5 days was also an S&P 500 one. European bonds and European stocks also hitting the top of the leaderboard. I should say in the corporate bond space, everything from Ryanair to Unibail, the Westfield Mall owner, saw their corporate bonds rally with this optimism over cyclical growth coming back to the European region. Now, flipping over to the outflows, we see the opposite. You see some of the safer investments, investors pulling money from those. That ex-tracker government bonds one, I should say, saw its worst day on Monday since April. So a lot of those safer trades really losing some steam. Interesting, though, that the MSCI World Index saw funds pulled from it, given that the All-Country World Index this week hit a new high, though the U.S. Minimum volatility certainly fitting that theme of buying riskier assets away from safer assets. We talked about this earlier in the show, that minimum volatility was one of the worst factors over the past week when it comes to flows. I should say so bad that Natixis even closed one of its minimum volatility funds, saying that they didn't have enough assets in it. Investors really just not interested in that bond proxy at the moment, Francine.
Danny, thank you so much. Danny Berger there. Now, news of the vaccine breakthrough saw the gold price slump the most in 3 months earlier this week. But while the biggest American gold ETFs say it saw heavy outflows, the two largest European funds saw substantial inflows. Now, that left net global ETF gold activity fairly flat overall. So what does 2021 hold for one of the year's most talked about exchange-traded products? Still with us, Keshava Shastri from DWS. Keshava, maybe if you don't buy gold ETF, if something goes wrong in 2021, is there something else that you would buy?
I think there is gold has definitely been in big vogue, and there is a big trend that's been happening from futures to gold product and silver futures to silver ETCs or ETPs. This year, as you rightly said, more than 10 billion money has gone into gold products alone. So that's been a trend for 2021. I think when we speak to clients, the large institutional clients, what's on their mind, I think ESG is definitely a big focus for them, and also kind of fixed income. With the market being so much larger, so we're looking at how do we provide that kind of exposure to clients, but also then be putting fixed income and ESG together. So we've launched quite a few products recently on dollar corporate ESG, short duration US ESG Euro corporate. So that is a big theme, and what kind of Danny mentioned about some of these MSCI World and some of the outflows, we're seeing clients getting out of those core range non-ESG into actually our ESG range. So that's been a massive trend, and I think when we speak to clients actively and even internally for our own, at the firm level, our big priority is ESG. So that will be a key thing to kind of look at. But also on the currency hedging, as some of these kind of volatility kind of cuts in between Brexit or maybe other things, we're seeing a lot of clients playing that in currency hedge exposures to add into that.
Keshava, thank you so much for all of your time today. Keshava Shastri, their head of capital markets at DWS. So certainly a lot going on in the markets and a lot going on in the ETF space. Now that's it for this week's Bloomberg ETF IQ Europe. Yes, we will be back with more next Wednesday at 9:30 a.m. London time. Of course, we'll have the latest on leaderboards. We'll see the week that was a lot of focus, of course, not only on gold products, ETFs, but one of the main questions, what happens to liquidity and what happens to volatility in the markets from here until the end of the year. This is Bloomberg.